It's pretty obvious that inflation has been running wild for the past few years, and it's not fun for anyone. We've been sitting at higher levels, gas prices have gone up, the price of eggs has become unaffordable. It's not fun for anybody really involved, yet the Federal Reserve wants to change the inflation target. We can see right here the curious history of the Federal Reserve's 2% inflation targeting. They have a video here basically of a bunch of people in like central bankers and stuff talking about it's 2%. It's actually just random that that number came about. It doesn't really matter. And it's just, it can be 4 or 5% and everything will be great.
But who decided 2% was the magic number?
It is, I think, an error to say 2% is somehow magically the right number.
You would think somewhere in the Bible, and God says He wants 2% inflation.
The 2% inflation target, like it's relatively arbitrary.
You can see there that, they all just think it doesn't really matter. It's all arbitrary. If we just double the inflation rate, it's perfectly fine. And it would be perfectly fine for people who have tons of money that inflation doesn't really affect you. But we've seen what big inflation does to average, normal, everyday people. Things become extremely unaffordable. I mean, all you got to do is look at credit card debt, which is surging and skyrocketing. People are at a breaking point now. And I think that's going to play a pretty big factor in what the Fed has to do. If they have to cut rates, if they have to make the economy better, flood the system with money again, because people are starting to get a breaking point. Savings is at an extreme low, credit card debt is an extreme high, and at some point something breaks. But this goes on to talk about the 2% and like how it was made in New Zealand and all of this stuff, and the central bank got separate, became independent. You can see some quotes here saying, we were saying, okay, if we have independence, what should we target, interest rates or monetary supply? And I just one day said, well, actually, what are we trying to achieve? We're trying to achieve price stability. Why don't we just have an inflation target? And that's where they're saying the 2% thing became real. That 0 to 2% was the target range and all this stuff. And that's why it's real. And it's all just arbitrary. But there is some pretty bad news for these guys because all these central bankers who seemingly know greatness. And, we saw our central bank before in 2020 say printing money won't lead to inflation. Then they said inflation will be transitory. And now they're saying inflation's a problem. So, maybe they don't really know what they're talking about. But for markets and an economy, what would help with price stability is being predictable, right? That is what matters, being predictable in what you're going to do. That helps everybody price everything efficiently, and that leads to stability. That's why something like Bitcoin is something that's massively talked about in this world, because even gold, using a hard asset, that something is predictable. You can predict the supply. With Bitcoin, you know exactly with certainty how much Bitcoin is made every 10 minutes, every day, every week, every month, every year, then the halving, and you know from there too. So Bitcoin is completely predictable. That is a good thing. Gold, a little less predictable, but still predictable. You can still predict that we're going to get X amount of gold mining this year, and maybe you're off a little bit, but it's not going to be too insane. But what we live in today is a Fed that can do whatever they want. What are they going to do at the next meeting? Are they going to cut rates, raise rates, keep rates the same, print more money, flood the market with liquidity, take liquidity out of the market? Nobody knows, except for a group of unelected central bankers making decisions for everybody. What a fantastic system, right? And it's worked out so well so far. But we can see them go on talking about raising the inflation rate, saying there's no evidence that 3% or 4% inflation does substantial damage relative to 2%. And it is, I think, an error to say 2% is somehow magically the right number, which, again, they're focused on the wrong things. They should be focused on predictability. That would bring more stability. But inflation, how can you say higher inflation is good? Higher inflation is not good. It's only good for people who own assets and people who are rich, because rich don't notice the increase in inflation, and the rich typically own assets, but anyone who owns assets, those prices go up because of inflation. I mean, if you look at this right now, this is what we have. 2% inflation, if that's the target and everything, that your money will get cut in half, the purchasing power will be cut in half in about 36 years. Now, if you say you want to bring that up, they were talking about 3-4%. You could see this, 4%. So this talks about 6% would be around 12 years, 4% would be around 18 years. So cutting it in half, right? If you go to 4% inflation, you're doubling the inflation rate, you cut the rate in which your money, your purchasing power, gets cut in half. That becomes a massive problem. If you're going to continue pushing inflation higher and higher and say 4%, it's not harmful, it's the new normal, it's so great. That means about every 18 years, your purchasing power gets cut in half. And if they're going to the higher end of like 5-6%, then you're looking at every 12 years, once a decade. Imagine that. Once a decade, all of your purchasing power, everything that you've worked for your entire time and you've saved and you've built up, you wanted to make some sort of purchase or just save your money, you got punished for it, and the value got cut in half, and now what? You're back to square one, right? I mean, all we got to do is look at the recent times, right? When you think back, were you having better times with your money around here when inflation was around the 2% mark? Or has it been better recently in the past couple years where it's been hovering at 7%, 6.5%, and it hasn't been moving down really over the years? 23 is still ongoing, but 7 to 6.5 is not a pretty big move down for the rate hikes and everything that was starting to come in, and historical rate hikes at that. So you got to think, what's going to happen if this is a new normal and you continue getting priced out of goods? That's just insane. That system doesn't work. It crumbles. And we can see how bad it's getting, right? With Michael Burry, actually, I think Michael Burry talked about this. It says here that Michael Burry says consumers chose violence rather than cut back on spending in the face of inflation, which is true, I guess. If you look at the numbers, credit card debt is almost $1 trillion. The average American's credit card balance is $6,000. The average APR is APR is 25%. And the median bank account balance is $5,500. Those are not healthy numbers. Those are people drowning in debt. That's people trying to pay for things that they can't pay for, going on a credit card. And at some point, something big breaks. At some point, people start to say, do you pay your credit card bill or do you buy food? Probably ditch the bill, right? And then you have massive problems with the banks and the credit card companies. And what happens then when people stop paying their credit card bill and there's $1 trillion on the line there? That's a lot of money. If anything, the last couple of years have shown that the central bankers don't really know what they're talking about. No real economist does. We went from the literal printing of trillions of dollars in under a year, saying it's not going to do anything with inflation, it's perfectly fine, to having massive inflation, saying it's transitory, don't worry about it, to now we have, inflation, the new normal might be here. You might just have 4%, 6% inflation. That's the new thing. Seems like they're just making it up as they go. Nobody really knows what's going on. They're all just kind of winging it. So hopefully they don't adopt these policies. Hopefully, they don't say the US and the average, the world doesn't say, 5% inflation is the new target. That's the new normal and we're going to go forward there. I think it's going to have severe consequences for that. And, people are going to be poorer than they could have ever imagined. And it's just not going to be a good scenario for anybody. But we'll see what happens. We'll see what they end up doing. That's going to do it for this video. As always, don't forget to smash the like button and subscribe. And I'll see you guys in my next